Good morning, everybody. Thanks for tuning into the Daily Covered Caller. My name's Max. I appreciate you guys being here on the morning after. I still can't believe what happened yesterday. I need to make a video about it. All right, guys, let's check into these Defiance funds. But yeah, I'm not thrilled about it like everyone else is. All right, or like a lot of other people are. Let's just start with Triple QY. Okay, so Triple QY, these guys sold that 19,460 strike. I'm ready for them to get back in the 20,000s. They got in the 20,000s for a little while back in July as far as strike prices go, which means that, the market was there as well because they sell pretty much just a strike or two out of the money. All right, so let's see how they're doing today. I bet it's a full profit because the markets are bullish. Remember, covered calls are neutral to bullish strategies. Sure enough, these guys sold this option right here for $97. Right now, it would cost $0 to buy it back. It's a full profit of $1 million. It'd be the third profit in a row, profitable day in a row. Plus, it would make these guys up 18 cents a month on an earnings per share basis, but on a dividend basis, they would be an extrinsic earnings basis per share. They would be $2.70 up, or it'd be a $2.70 dividend estimated coming your way. Well, it looks like we're about halfway through the month. There's about 20 to 21 business days in most months, and we're on about day 8 or day 9. So in any event, all right, looking good. So let's check out JEPY. JEPY sold the 5607 strike for $23.50. Right now, the market's trading at 5617. So we have to get that number to go right here. And then we configure the points in the money. Then the money amount $0, right? But if the current price for SPX had been less than the strike price, that number would have gone there. But the strike price 5607, current SPX price 5617, we're 10 handles above. So great job, guys. Now let's check IWMY. Oh, these guys, the dividend estimate's only, on JPY, dividend estimate's only $2.55. And it's only 71% yield. I say only because that's come down quite a bit as volatility's come in. Okay, so now on to IWMY. These guys sold the 2135 strike. They got around $12.50 for it. Right now, the market's trading at 2160. So that means it would cost nothing to buy these back, which means they'd be at a full profit, which means this is going to say $0 here. All right. Nice. Now, these guys, unfortunately, even after the nice win today, if it hangs on, still be down 10 cents a share. IWMY is the weakest right now at this point. However, it has the highest dividend yield. Go figure. That's kind of the way it works lots of times. So that we're looking at $3.04 for an estimated yield on this one. Okay. So now let's check all USO, and we're going to check USO graphically. Well, or USOY is the high yield fund. Dividend estimate's still at $1, but I haven't looked at that number in a while. After this week's results, at the end of the day, today, I'll probably revise the dividend estimate. I'll look at it, sharpen my pencil, and see if we can't make that go up a little bit. I have to use a different multiplier for these options because they sell options that expire sometimes 2 days, sometimes 3 days. So I have to take the amount of extrinsic they capture, and I have to figure out how many days they were getting paid for. And then I have to figure out how many days are left in the month. And sometimes it's not always straightforward as to when they roll. So there's a little bit of estimating in here, and I missed this one bad last time. I said $1.50. I'm not going to miss it that much again this time. I'm going to pay closer attention to it. This fund's trickier to predict. Just saying. Okay, so now let's look at some charts and let's see where we are in relation to the profit boxes. Okay, so you can see the profit boxes are getting smaller In other words, shorter as we go up, because the option writers are getting less premium. As markets melt up, option premiums go down, covered call strategies become less profitable. However, covered call strategies are able to get more NAV as markets go up, because regardless of what people think, covered call strategies do get a little bit of NAV. They get the amount that the option's in the money. So we can actually visually see that. Every green box on this chart is how much upside they got on that day. And they have to close above. If they close above the green box, however tall the green box was, these guys are going to get credit for that, not in the dividend, but in the NAV. And the yellow box goes into the dividend. The yellow box is extrinsic. The green box is intrinsic. It's the in the money amount they write these options for. That's also why, but I always try to show it to you guys different ways. That's also why we look at the buffer report. We can also see it see the same thing in a different way in the buffer report. Okay, so that's triple QI. Let's look at SPX. I think they're all going to look pretty much the same. Now, SPX looks really bullish to me because it's on a new high for the day, and it's higher than it was yesterday at any point. It's broken out over yesterday's high. NASDAQ really hasn't done. I guess NASDAQ just did that. Now let's look at Russell. Now, Russell is bullish AF. I mean, my God, look at that thing. Way over the profit box. It's blowing up. Okay, so I didn't really like the signal a few days ago, but my little volatility-based trading system right here on this bar, I didn't do a good job drawing it. Well, anyway, right here on this bar, the short term went to bullish. And that's when the SPY, well, this wasn't the SPY, this was the Russell. Anyway, but the timing model, even though it gave a false alarm, it gave a bearish signal back on the 11th. This latest bullish signal that it also gave on the 11th, which was Wednesday at noon. But anyway, the SPY went from 545. You can see right there, these little bars are the 30-minute bar charts of the SPY to 561. So actually, the volatility traders, when they took their hedges off in this time frame, they did know what they were doing. Even though the longer time frame is still red and bearish, same thing here. When they took their hedges off in this time frame back on the 12th of August, boy, the SPY went from 532 to 559. So that's called a counter trend rally. That's called a counter trend rally. Anyway, so it's interesting to watch. So we'll keep an eye on that. Now let's look up here at the actual volatility. Let's look at the VIX. I mean, this is selling off hard. This is retail traders taking hedges off. Okay. And they've been doing it for days. And this is commercial traders taking hedges off. And you can see they aren't as excited as the retail traders. Remember, bearish is good in the volatility world. So this is actually like a wildly bullish chart right here. Okay, on a new low for the chart, breaking out of the Bollinger Bands, lower than it was at any point yesterday, making new lows. And same thing, even with VIX, which is VIX of VIX, volatility of volatility, second or third order derivative. This is a way to look what commercial accounts are doing, and you can actually see they're actually starting to put on hedges a little bit in this time frame. I mean, these are 30-minute bars. If this starts rallying and gets back over the 200-day moving average, especially if this one's still selling off, that's a divergence. And then my system, it's a rules-based system, would likely switch back to red at some point, and then we would likely have a sell-off, just FYI. So I'll let you know when that happens. That's, that's what I do. All right, so let's see what else we should look at. Let's do the buffer report. So I made this chart today. I think it's this one. Yeah. Man, I had all kinds of problems with this though. Gosh darn it. It wouldn't label it. I guess I just have to go. I don't know why I won't label it. Okay. I guess actually it did. I was, okay. My bad. It did label it. I guess I figured out my problem. Okay. So this is interesting to me. This is a different way of looking at the buffer report. The name of the funds are down at the bottom. The fund on the left is the fund of all funds, SPX, S&P 500. So we're going to use that for the benchmark today. All right. The rest of the funds are just some ones that I'm interested in. The first three are volatility-based funds, and these are the most likely to blow up when we have a big VIX event. And so that's why I follow them. That's SVOL, ZIVB, and THTA. Now, they've actually been performing pretty well lately, and I'm not saying they will blow up, but they're interesting to watch because they're the most volatile during a volatility event. But then the rest of them are some other ones that I just like to look at. So JPY, that's the Defiance. That's to me is kind of a benchmark because it pays the highest yield of any of the SPX funds. I don't ever think there'll be an SPX yield fund that pays more than this one, unless it's leveraged or whatever. Especially not now the Jays changed the rules to the game. But anyway, it was a great fun for sure. But you can see right here, this is the daily changes from the last day of last month. So you can see the market sold off on all of these. And here by, I don't know what day it was, but here by like the 5th trading day of the month, we were down 3%. But then you can see how JPY rallied back. Now it's only down 1.2%. This is a little bit confusing, but you actually want the ones that are doing the better are the ones that are, so SPY being down less. It looks like SPY and JEPI are the two best on the chart right now, as in addition to Theta. THTA is doing really well. Okay, that's kind of a steady one, But now the worst ones, not necessarily the worst, but the most volatile and the slowest to recover so far are YieldMax. Now YieldMax probably has more DeFi exposure in it or something that's been called. But all right, here's T-SPY. That's the new Psychotara fund by Tap Alpha. A lot of people love GPIX. It's a great fund. It's not doing as well as Defiance is, and iSpy. It's not doing as well as the daily is. The dailies are. So that's what I was going to say. So these are all daily S&P funds. So I'm trying to make an apples to apples comparison. Like I say, JPY is kind of the granddaddy of all of them. It's the big kid on the block. iSpy is great too. It pays about a fourth of what JPY pays, but it gets a lot of upside. Great fund. QDTE, maybe more like a third. It varies from month to month. Now, XDTE, great fund, pays about half, depending on the month. Depending on the month, pays about half the yield, but gets a lot of upside too. And a lot of people like XDT. So we follow that. But XDT is actually underperforming JPY a little bit this month, or this week, probably because there hasn't been many upside gaps. XDT is totally dependent on upside gaps, or not totally dependent, but you get a week with 4 upside gaps, it's going to have a great week. You get a week with 4 downside gaps, it's going to have a bad week compared to the other one. So, all right. So there's SPY. SPY is a nice one too. SPY is actually down the least. SPY and JEPI are actually the 2 champions right now. Anyway, we'll keep an eye on this. We'll follow this as the month goes on, and hopefully all these will go back above the line, and hopefully ZIVB, which is the most volatile but also the most profitable of the volatility funds, will be back above and going up. So, right. All right, guys. Well, let's see. Unless we have anything else I can think that I forgot to talk about, let's just do the normal buffer report for normies. The normal buffer report, I think, is this one. No, this one. All right, here's the normal buffer report. So, and this has some of the other stocks on it. Look at old SPY T. Nice job. Look at old JEPI getting all the upside. Look at ZIVB getting more than all the upside. This is a different way of looking at it because this is comparing each fund to its own benchmark. The benchmark is in red. I don't know why I didn't make the benchmark blue. That would have been so much easier. But anyway, the benchmark's red. High yield fund is blue. Anyway, you can see what else. Look at ULTY bouncing back. Nice job. You know, Jay's uncapped the upside. So the capped upside isn't the only problem in these funds. That's what a lot of people are missing. But it is one thing that will help. So this should be really interesting to watch ULTY. IWMY. It looks like the Russell's just up so much today. All the Russell funds are the best performing funds on the board. Look at IWMI just murdering it, 1.3%. Nice job. I mean, it's not doing much better than ULTY, but even something like RYLD, which is just a boring global X frickin' fund, is up 62 bips. IWMY, you know, the boring Defiance fund, not actually that boring, but it's up 61 bips. All right, guys. So maybe we should, I'm trying to think, the one thing I didn't really talk about is, I mean, YieldMax stocks, what are they doing today? Tesla. Let's just go through some of the most up and most down. Okay, most down is going to be volatility. Tesla's actually on the most down list. NVIDIA's down, but it's not down much. NVIDIA's down a little bit. Let's pull up the chart. It's kind of rolling over. All right, let's see what else. Now, let's see. AMD's up. Not a whole lot, though. So, I mean, I should have clicked on AMD. AMD's up. GameStop's up. GameStop had earnings this week. Anyway, there's not a – I'm just trying to make content, but there's not a lot to look at here. You guys ever do earnings trades? Are you interested in any like this? I love this. Here's a bearish GME and a bullish GME. I haven't even checked how these came out yet. Okay. So whenever I'm not sure on an earnings trade which way it's going to go, I play one in each direction. But anyway, this is an example of when it worked out great. This was the bearish earnings trade. I pushed this 21 put out of the money and sold it, and it gave me a profit loss profile, which would actually do well if the market sold off. So evidently it did. So let's look at this. Where is GME? GME is right here. Okay, 1 week. I need to show the 1 week. Okay, so yeah, the market went from 23 to freaking 20. So most earnings trades don't make money in that situation. Now, I also did a bullish one because I didn't know if it'd be bullish for GME, but the bullish one only lost $18, and it's because they're both theta positive trades. Both of these trades were set to make money off option time decay. This trade, the feature benefit was selling this 24 call for $1.42. It's only worth 3 cents now. That's the profit driver. That $1.42 is like, if it was a covered call, that would have been your covered call that you sold. This is a similar strategy to a covered call. I'm selling a call and I'm using other options to cover it. It's a double diagonal. Anyway, if you guys are interested in this type of trade, let me know. But even in a worse event where maybe GME would have gone down another 20%, this trade would have been the bullish trade would have lost 100. Let's see what the bearish trade would have done. The bearish GME. Well, if it would have gone down more, it at some point it could have gone down enough that it would have made the trade overall lose money. But GME would have had to drop to like under 19 and then would have lost the difference between 90 and 50. So you can see this. I like trades that are theta positive where you make money off time decay and they give you a wide outcome of all you had to do with this one is stick the landing somewhere between 20 and there was a bullish trade too. So it could have gone probably up to, I didn't check the bullish GME. But if it blew out on the bullish side, it's hard. The screen doesn't go that far, but in any event, these trades give you a wide range of profitability, probably somewhere between 27 and 19. These two trades together would have been profitable. Anyway, so let's see which So also Restoration Hardware had earnings last night, and I guessed that one would be bullish, and it was. But I like to also make trades like this, where even though you're selling this call, you don't lose money if it goes up. This one, there's not a bearish counterpart. So, all right, guys. Well, I'll let you guys get out of here. But what I was going to say is we'll look at for next week. We'll do like this. We'll advance for next week. See who has earnings, if anybody. FedEx, Lanier. I think that's a home builder. Darden Restaurants. They own. Don't they own Outback and Cracker Barrel, and I don't know. All right, guys. I appreciate you being here. We'll talk about more earnings next week as they happen. Have a good one.